This is the most important candlestick in all of trading, the pin bar. It can help you identify market reversals and trend continuation with incredible accuracy. And it's a pattern that professional traders rely on every single day. By the end of this video, you'll know how to spot them, trade them, and profit from them. Hey everyone, welcome back. My name's Andrew, and today we're going to talk about the pin bar. If you could only understand one thing about candlestick analysis, it should probably be the pin bar. Whether you're a total beginner or you're just trying to refine your strategy, this video is going to help you out. We're going to talk about what pin bars are and why they're so important, the psychology behind pin bar formation, how to identify high probability pin bar setups, trading pin bars for both reversals and trend continuation, and we're also going to mention some common mistakes. So basically, a pin bar is a candlestick with a really long wick and a small body. That candlestick tells us a story, and it's a story of rejection. A bullish pin bar has a really long wick that goes down, and a bearish pin bar has a really long wick that points up. So here's what happened during pin bar formation. Price moved really aggressively in one direction. Then it hit a significant level of support or resistance. The buyers or sellers stepped in really forcefully, and the price was rejected back to around where it started. This rejection is what's so powerful. It tells us exactly where the market said no to a particular price level. So when you see a pin bar, you're seeing things like failed breakouts, institutional rejection, where really big players are defending a key level, momentum shifts, and generally confirmation of support and resistance levels. So here's why professional traders love pin bars. They provide really clear risk management. The wick gives you a great idea of exactly where to place your stop loss. These are generally high probability setups, especially when they occur at really key support and resistance levels. These work on all time frames, and they're really versatile. You can use them for reversals, trend continuations, all kinds of stuff. So here's how to trade pin bars for reversals. Probably the most important thing is location. You want to see the wick of the pin bar approach a support or resistance level. That's really important. The context matters. This should align with the overall trend. Finally, the size. The size of the wick is really important. Generally, the bigger the wick, the better signal this is. If you can get volume confirmation, you're really well set up. What that means is you see the pin bar and a spike of volume at the same time. So now I'm going to walk you through an example. On the chart, we have a long wick that pretty much touches this resistance level exactly. We have a small body, and this was accompanied by high volume. We can really see the exact level that's being defended. So to enter this trade in a pretty classic setup, you would enter as soon as the bar is fully closed, and you'd set your stop loss just beyond the edge of the wick. You would generally set your take profit for the next swing high or swing low. Maybe you want to do a 2-to-1 risk to reward. It's all up to you. Here's another pin bar example, and this one is for trend continuation. So you're going to want to start here by looking for a strong trend in general. Now we're looking for a pin bar that's pointed against the trend. What that tells us is that there was some kind of move against the trend, and it was rejected. This shows us this is a strong trend, it's likely not going anywhere, and it's a good idea to get in. So let's walk through a quick example. We see on this chart, we've got a strong trend. Now we see this pin bar that rejects off of this EMA. We can zoom out a little bit and see that this is a pretty good resistance level. This gives us a lot of confidence that this trend is likely to continue, and it does. So let's walk through a couple of mistakes to avoid. The first one is trading every pin bar you see. They're not all created equally. If it's not being rejected off of a key EMA, a trend line, a support level, it's not a very good pin bar. It doesn't really tell us a lot. If this is a small pin bar, we probably don't want to do a lot with it. What this shows us is that the move that was rejected just wasn't very aggressive, and it doesn't give us nearly as much confidence as a stronger rejection would. When you're trading reversals, be really wary of trying to catch the bottom, basically. If you're in a strong trend, one pin bar is likely not the only thing you need to see to get in. You're going to want more confirmation, maybe a double top, a double bottom, something like that. Something else about pin bars, you really have to wait for the candle to close. A pin bar is not a pin bar until the candle is fully formed. Okay, so let's recap. Pin bars are really powerful. They show rejection of a certain price. Location is crucial. If a pin bar isn't off a significant level, it's not very valuable. You can use this for reversals and trend continuation. So here are some next steps for you. First, practice identifying these. Just spend some time marking up pin bars on your charts. Backtest some of these setups and see how they played out historically. Start small, paper trade, use micros, whatever you want to do. keep a journal of your trades, see how they go, and really try to be patient. You want to wait for quality setups. These pin bar setups are not going to be successful 100% of the time, but they do often have pretty good win rates. The name of the game is finding high quality setups with good risk to reward ratios and then having good risk management. If you can master this one pattern, you're going to be set up really well. And that's it. I hope you enjoyed this quick intro to pin bar candles. I think they're a really fundamental part of candlestick analysis, and they can really bring a lot of value to your trading. If you enjoyed this video, I make lots of educational content around day trading concepts. There will be some on the screen at some point. If you like this video, I'd love it if you could like and maybe even subscribe. Either way, my name's Andrew, and I'll see you around.